Okay, let's select a random candle here and look for a bullish example. I'm going to select any candle with a bottom wick. Okay, I see one here that doesn't have a bottom wick. Well, that's not going to be a very good example, but 90+% of the candles have a bottom wick. So let's just select any random one. Select this nice big one. Okay. So again, what are we looking for? We're looking for the beginning of the week. What is the manipulation that occurred to set this low of the week here? Okay, go again to the 1 hour. We can even do the daily this time. Start with the daily. Do we see anything specific? No. That's the Monday days candle. I don't see anything significant here. Go to the 1 hour. Again, I'm not looking for what's happened in the future. I'm just looking for what's happened immediately here. Fridays push up, down. Okay. Okay, simple first line of defense. Nothing really too interesting here. But we can see we've had this bearish order block. We have an FEG stacked on top of this. And we can see that these bodies are respecting it. We've had one breakdown lower, but it's immediately retraced back. And you can see bodies respecting it. And here, literally to the point, right? Again, even if I carry this over, we can see that, again, to the exact pip, right? To the exact pip. Of course, this may be hard for us to notice by then, but that's not the point, right? The point is just to highlight the fact that this thing is pinging off of this FEG, right? Now, let's look at this. This is the low. This is on Sunday. Okay, so the low formed on Sunday, and that's because what's happened on Friday. Friday must have been big news here. It was pushed up, and this is continuing the order flow. So the low is really set on the Friday of the previous week, and now we're continuing order flow. But we can see here that the low of the week was a result of this order block. Let's see if there was any manipulation on a lower time frame. Okay. Go. Okay, do we see anything specifically here? Friday. 5 p.m. on a Sunday. Okay, so this is a bad example. We're going to go to a different one. We will go to a different one. I'm not going to end the video either, because this is 5 p.m. on a Sunday. So that's just literally the market open, which is just this big push, and now that's recorded on price. So that doesn't make for a good example. I'm sure, though, there is some sort of manipulation that happens at a more reasonable time that we could look at, but that wouldn't be representative of the weekly chart here. So let's just grab another one here. Alt J. Looking at a bullish candle, so let's just look at this one. Okay, what happened to set, what manipulation occurred to set that low of the week? Because we're in a bullish candle. Let's go down to the daily. Anything specifically here? Reacting to this overall FEG. Come down into this order block here. Right, order block is coming from liquidity. It's reacted to this FEG, right? So it's criteria of an order block because it's tapped into liquidity. Start to break up. Let's get the replay bar tool out and pull price back here. Let's go to the 4 hour. Oh, this is the daily chart. We've manipulated below the previous daily high as well, so let's mark that out as well. PDH. Okay, so we've manipulated below the PDH and we've come into a bullish OB. You can remove that FEG. We understand that that's there now. Okay, this is that previous daily high. So it looks like to me that we've manipulated just below the previous daily low. Sorry, not a high. Right. Previous daily low, manipulated below it at 9 a.m. Taking out these wicks here. That's a Tuesday at 1 p.m., Wednesday at 5 a.m. Taking out that London session of this entire leg. Interesting. Taking out previous daily low, and we've come into an OB. Let's go to the 1 hour. There's that London session low. So again, these lows they aren't insignificant, right? This low here isn't insignificant. This is London session here, right? So that's London session is the most volatile. It has the most volume in the market, right? The most of the trading of the day happens in London session. It gets most of the volume, it gets the largest pip moves as well. So we understand that this is the low of London session followed by a big displacement out, right? So time really is significant here because this displacement shown means that there's substantial amount of liquidity below this low, right? Oops. Mark that out with a vertical line here. How would I know if this was real time that we're not going to liquidate any of this, right? Of course, we don't know, but what we can do is stack these confluences. We have the OB, we have the previous daily low, we have this London session low from Wednesday. We're now in the next week of Wednesday, but last week's Wednesday, this big move came out and prices never come below this to take liquidity. Took liquidity here. We can go and see if there are any possible entries. Not that we need to enter down here, but just for the sake of education. Okay, so as soon as we've tapped in there, bounced off, came into an FEG. Don't expect anybody here to be catching a trade like this. This is catching a falling knife essentially. Tapped into the FEG and then rocketed it off. Okay, but our job is not to catch the high of the week. Our job is just to try and build a narrative, like I'm doing right now, to suggest that this is the low or the high of the week. Call this low. If we can determine now that this is the low of the week, based on the narrative that we've built, we've come into an OB, we've liquidated the previous daily low. It's Wednesday. Between Tuesday, typically what happens is between Tuesday, 2 a.m. and Wednesday, 11 a.m. is when we see the low or high of the week form. We've liquidated a large liquidity pool, old low, London session low, tapped into OB, previous daily low, liquidated it, ripped off, okay? Now from here, what we can expect though, instead of trying to focus and catch this, absolutely not, don't want to be catching a fall in life, we can wait and see what's happened afterwards and determine that this is the low and then take longs from high value areas, such as we have a breaker block here. We have an FEG here. Stack the FEG with the breaker block. Enter. This, take a trade like this, and this is a trade you can hold for the rest of the week because you understand that below here is the low of the week and we're likely to continue higher. Of course, you can confirm this on a lower time frame and potentially get smaller stops like so, right? And then increase our R. Let's see if there is a trade available. Tapped into this region, displaced up. Okay, we did not break structure, but we understand that this is likely a creation of a new ISP. Got an ISP here on the higher time frame, we got an ISP here. This is the level to take if this is an ISP. Okay, 15-minute pushes up with some aggressiveness. We have liquidity here. Beautiful. If you look at the structure model, you'll see where I've delineated the long-term structure point on the structure diagram. You'll see something like this play out exactly, where it doesn't break the structure to the high, but we've created that internal range liquidity and a level to trade off of. Okay, here I don't see an FEG. I do see this down close candle, so I'm going to jump into the 5-minute now and see if we can actually get an entry here. Okay, so we have a swing fail. This low fails to come below this low. An aggressive, impulsive push up, giving us this OB here. We have this whole OB here, rather. My mistake here. Then we have FEG1, and we have FEG2. So if we follow our rules of first line of defense, which is if we have a POI stack here, we can assume that this is then a breakaway gap, and we can just trade this one. You can cover the low here if you are okay with the risk, or you can cover the swing low or even below fair value gap number 2, right? Depends on what your risk tolerance is. You can see liquidity build up before the POI. Power of 3. Power of 1 is accumulation. 2, the manipulation of price. So we have accumulation, manipulation of price, distribution of price. Okay, tapped in. You have a trade idea right there. 5.42R. Now that we have the backing of the low of the week over here, ISP, we can potentially even hold this significantly longer because we understand that the rest of the week from this point should be bullish, okay? If we're not confident in this POI for whatever reason, you can then of course confirm it on a lower time frame. We're on the 5-minute right now. My rule of thumb is always execute on the higher time frame if the opportunity is there. But for the sake of education, we can go down to the 1-minute here. I can't, unfortunately. That's too bad. Maybe I can get on to the 3 minutes. Okay, so pushed up above, and I don't see anything so clear with an FEG that's tradable here. We do have a liquidation of price here coming into this down close candle, but yeah, nothing that I see that is super clear as an entry on the lower time frame, and that is why I always prioritize just getting involved on the higher time frame and taking what you can get, right? Yeah. Well, that's just it.